Over the last 2 years, I've made it my mission to try and understand as much as possible about the actual process for raising capital. And I was actually reading a marketing book, and in that marketing book, and it was highly relevant to capital raising, they talked about the 3 stages that typically a buyer will go through. And in this case, this is going to be an investor. So the first stage is awareness. This is where someone actually becomes aware about your opportunity. They become aware about your company and they actually start following you. The second part is actually consideration. This is where they're looking at they're reviewing your information online. They're trying to understand more about your business model. They're trying to understand more about your plans, your direction. What is it unique that you have? What's your economic mode? All those sort of things. This is in the consideration phase of your business. And then the last part is the decision-making phase. So if you think about it simply like that, as you're planning your next capital raise, you got to think about it from those 3 different layers. The first stage is awareness. The second stage is the consideration. And the third stage is the actual decision making. Each one has their right strategy and each one has a process that goes along with it. And then so that's the 3 stages. Now I'll add a 4th one to that, and it's really quite simple. The 4th stage is just communication, right? The publishing aspect. So the suggestion we have for companies, if someone doesn't become an investor in your business straight away, don't stop the conversation there. Add them to a registration of interest list and just provide them with updates over and over. So again, to finalize, the 3 stages of someone becoming aware or a process, a buying cycle of your business. First stage is awareness. Second stage is consideration. And then the third stage is a decision-making process.